Hello everyone. Today we are learning write off and write back. Many people get confused with what is write off and what is write back. Some people associate write off with liability only, but this is not the case. Write off means eliminating anything from your books of accounts. It may be asset, it may be liability. To get this concept clear, I have taken one example. This balance sheet, which is as on 31st March 24. This is the asset side and this is the liability side. In asset side we have debtors ABC. This debtor A is lying in the book since June 2020. That is, it is very old debtor lying since more than 3 years. In liability side we have creditors XYZ. X is lying since very long, since April 20, very long creditor. Now management has decided that this creditor we are not going to pay because he is not claiming the money. So management has written off this debtor. Management has eliminated the balance of this creditor from the books of account. Now when it is written off, the journal entry would be X account debit to P&L account. P&L account is credited because we are not going to pay the creditor in future. It is one kind of benefit to us, so PL account has been credited. Now in case of debtors, management thinks that this debtor is not going to be realized in future. This debtor is not going to pay us, so management has decided to write this off. For this debtor is asset, in future we are not going to get the payment, and it is a kind of loss to us. So PL account has been debited and A account has been credited. Now coming to write back. What is write back? Any previously written off item which management has decided to take into books again will be write back. Now take the our own example, which we had taken in case of write off. We had written off creditor X and debtor A. Now management thinks that we need to pay to that creditor because he is asking for the money. So now we have to take that creditor back into our books of account. So previously we had debited X and credited P&L account. Now we have to debit P&L account and credit X account. Suppose in case of asset we think that we are getting payment from that debtor. So to get payment from that debtor we need to write that debtor back again in our books of account. So previously P&L account debit to A account was passed. So now we have to debit A account and credit P&L account.